Hello humans! In the course of my cold reads, I've been asked probably about a dozen times on my opinion on various crowdfunding opportunities. And it made me think. I've done crowdfunding, I've raised money through crowdfunding, I've invested in crowd projects, but it's true. A lot of the times, probably the majority of times, people invest in crowdfunding projects based on the fact that it's got a hype. Now, there's nothing really wrong with hype. Hype can tell you some interesting things. But hype doesn't really allow you, especially a retail investor, to ask sophisticated investor type questions. So, I'm going to start a new series where I'm going to review every single crowdfunding deck I possibly can and share with you the questions I would ask of that opportunity and give it a face value rating based upon what I see. As a caveat, I will not invest in any of these things because of this video. And this is not financial advice. I am not giving you investment advice. I am simply telling you my opinion of the things that I see. Because it's so easy to fall into the trap of hype. Hype doesn't mean good. So, I'm going to look at these decks. I'm not going to go based on the video. Okay. So here's a couple of tips when thinking about crowdfunding investment. First thing, don't make your decision based on the video. The video is designed to create FOMO. FOMO is not a good reason to invest. The second thing is the presentation page on a Crowdcube or a Seedrs is deeply vetted by Crowdcube and Seedrs to tell you things that they have verified. Now, on one hand, that is good. On the other hand, it highly distorts the vision and direction of the startup. Basically, the startup can hide behind what it's done in the past as opposed to tell you as an investor what you are investing in the future. So, I always make my funding decisions based upon the Q&A and the deck. And so it's the deck I'm going to review, and I will tell you the questions I would ask if I were considering an investment in that project. So, first one. Let's begin. Now, this is a popular one on Crowdcube, a lot of hype. It's called Howbout. So here we go. Let's go through the deck. Time to actually get your friends together. Okay, so a social app about friends coming together. Now, pre-pandemic, there were millions of these. And they, for the most part, failed. Usually because of the dominance of Facebook and whatever else, making the problem of communicating with friends, well, no, it wasn't really a problem, was it? But post-pandemic, there might be some new behaviors. So the first thing I would be thinking of immediately is, what is the behavior that exists now that didn't exist pre-pandemic that makes this opportunity a good opportunity? Okay, so the easiest way to get friends together. Social media is no longer about your friends, it's about your followers. No, it's just infrastructure that's used for many things. Friends want platforms that focus on their private communities. Do they? How about harnesses the untapped social power of the calendar? Okay. Interesting. Basing it around a calendar. Okay, highlights, 300,000 users. Cool. I want to know how active those users are. 125 plus countries. I mean, any app that has more than, 10,000 users will have loads of countries. Doesn't mean much. And if anything, 300,000 users across 125 plus countries means a highly fragmented user base, which means how many friendships actually exist? Don't know. 2 million plus events organized or posted. I want to know that difference. 75% plus of new users are organic. Very interesting. VC backed. Supernode Global. Ha! Okay. Now, I would want to know, I would want to see the pitch deck that got Supernode Global's investment. Advised by senior Snap exec, cool. Atomico Angel Program, Samir. Jag Singh, ex-Techstars MD. Okay, so already on the highlights, I've got a few questions immediately, because I probably won't need to read the rest of the deck to know the questions I'm going to ask. The first is, I want to see Supernode Global's pitch deck, because that will tell the true story, not the Crowdcube story. I also want to know how many of those 300,000 users are continually active, especially after a month. How many return and continue to use the app after a month? And I want to know more details about those 2 million events organized. Okay, contents, problem, solution, traction, team, market, okay, blah, blah, blah. Making plans with friends suck. Yes, I agree with this problem. I think we all do. How about an app that makes organizing plans easy? Now, there's been a lot of these things to organize plans. I want to see essentially how many people have organized something once and gone on to organize it again. That's a critical thing. So how many people, how many of those users organize something once, it happens, and then they organize again? Retention, essentially, is the golden number in everything when it comes to social mobile apps. Retention is key. An app that shows when you're all free. There's lots of those, but it's, I admit, not designed around this problem. They're usually professional apps. Keep you on top of everything. I don't see that being a big problem already. It's been an exciting start. Okay, so this is the thing that matters. 5,000 ratings, 4.8 out of 5. It's very good. People think we're onto something. 2 million plans made, 300,000 users, 125 plus countries. Okay, so far this is pretty good. We got a lot of people talking, don't care. We've already gone global, don't care. I don't see that as being a positive thing at this point. Okay, now this is an important one. 10x growth since 2021 investment round. So they raised money last year. I want to know the terms of those investments. I want to know the classes of stock that those investors have. I want to know if I'm just going to get squeezed down to a tiny little thing. And I also see the shape of this graph is a great shape. That's pretty cool. Again, retention. Total users. Okay, something that's not clear here. Are these aggregated total users? So the total users collect unique humans since that point in time? Or are these the current active users right now? If it's total number of users, it's not a bad number, but it's not a great number. If it's active users, that's a brilliant number and a brilliant shape. Over 2 million plans made. Okay, now the thing about this inflection, which raises an alarm bell for me, is that after an investment, of course numbers are going to go up. Of course the gradient's going to change because you're going to spend so much more on marketing. So of course it's going to shift. So I want to know the ratio of how much money was spent to get the first million versus how much money was spent to get the next million. It's not about the time. It's about how much did they spend to get that activity going. So marketing and customer service costs, basically. Because if that hasn't improved, if the cost of acquiring a user hasn't gone down, and the cost of servicing a customer hasn't gone down, this is a money pit. Virality loops, blah, 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 not interested. Okay, team, always interesting. Ex-corporate and commercial lawyer focused on TMT and disruptive tech. Now, not saying anything negative about the human, but that doesn't scream founder fit to me. So I'm not interested in Neil. I want to know why Neil's the right CEO. That's something I'd want to ask. Jake Jenner, ex-software and data investment banker. Again, don't see the fit. Ex-spacecraft engineer with extensive experience in app development. Duncan, maybe a fit. I don't see any social behavior here. Head of marketing, former marketing head at US VC funded high school calendar app. I mean, probably talented, but Callum Murray. Okay, so basically, this team, they all look like credible humans, but I'm not seeing the fit to the problem. Again, raising the alarm bell to me is the only reason they're currently showing traction, because they've been funded, as opposed to they have this traction because they're good. Surrounded by leading tech investors and advisors. Now, Supernode, brilliant fund. They invest in good things. Boost Capital, they're fine. Don't know anything about Angel Invest. In terms of their advisors, I don't know any of them personally. But Claire, I mean, I'd want to know how active Claire is. If Claire is highly active, I'd actually, if I'm honest, if I was considering writing a big check, I'd want to meet Claire and do some diligence. If I was writing a small check, I'd probably be comfortable with just knowing this. There's a huge gap in the market. Not really. It's not really a market, it's a behavior. Why Howbout and why not? Don't care. Monetization plan. This is important. In-app booking. So basically, they're going to make money off lead generation. That's essentially their business model. It's worked in the past, but it requires enormous volume and it requires enormous retention. 1 billion annual initial market opportunity. Don't believe you. Why we're crowdfunding. Don't care. Financial summaries. They're basically, okay, what this tells me, I'm going to grey out the actual numbers. Actually, no, I'm not. They've put it online. Tough shit. I'm not going to grey them out. What this tells me is that they are going to make a big loss, which is fine, which is why they raise money. They're going to be spending basically all on marketing. So I can see they spent £36,000 on marketing. Then after their funding, they spent nearly 10x on marketing, but they didn't 10x their numbers. Oh no, but they 10x their numbers. So there hasn't been an improvement, or at least it's not signaling there's been an improvement. It just means they've spent more money. I want to see people get better at something, not just spend more money. Because money is not the answer to the problem. Money is the accelerant to the solution. Always keep that in mind. Are they going to spend loads of money on marketing? But what this financial projection tells me is that they're going for a venture exit. Now, a venture exit is where you and I, as a shareholder, will only really make money from our investment when they sell the company. So that means I really want to know who they think is going to buy it, or what type of company is going to buy it, and what will the conditions be where they consider an exit. And if they haven't got an answer to that question, or a hypothesis to that, I wouldn't invest. And that's that. So that's what I think. So in summary, the core questions I want to know. The very first thing is, what is their cost of acquiring a user? Because I see they've 10x'd their marketing spend and 10x'd their user acquisition. So if that hasn't improved, so if the cost of acquiring a user hasn't gone down, I'd be really concerned. The second thing I'd want to see is Supernode Global's pitch deck. So whatever they use to raise funding from Supernode, I want to see, because it's going to tell me things that this deck does not. Supernode, a reputable firm, they've done diligence. So I want to know what they did diligence on. The third thing, I'd like to speak to the lead advisor. I need to know how engaged Claire is, because the founding team itself doesn't, at face value, seem to be a fit to the problem. But Claire, the advisor, does. So I want to speak to Claire, find out how involved she is, and see whether or not it satisfies for my kind of comfort level of investing. And then the last thing, an important thing, in all social apps, they have not mentioned it in their deck. What is their user retention? How many people book something, organize something with multiple friends, and then that same person goes and organizes more things? In the world of social apps, it's incredibly easy to get users, relatively, if you spend money. It's incredibly difficult to keep them. And so that's what I want to know. And lastly, this is a venture exit opportunity. So who on earth do they think is going to buy it? The answer will not be IPO. There you go, there's my review. I hope that's helpful. Cheers.